Saw a rally in the first hour, but then that just faded into nowhere, and the rest of the session we were seeing losses before a little bit of a tick up in the last closing auction. We saw the market up by 0.1%. Of course, it was all about Greece and the news flow coming out of the Eurozone. And I guess one of the best ways to have a look at sentiment surrounding the Greek situation is through the euro versus the US dollar during the Asian session, and that's exactly what the Australian market tracked. I've got the Australian market on top, that's the intraday graph, and in blue I've got the euro versus the US dollar. And if I just overlay the two, what you'll see is they moved pretty much bang together all day. So really taking our cues from Greece. And this weekend could be a very important one. One of the things I have noticed all week is that there has been such a huge divergence in opinions. And that's because the Greece situation, I guess the outcome is seen very much as binary outcome, where it's either a pass or a fail result. If I guess we get a good outcome and we get a pass result, then market valuations are looking very cheap and it's a buying opportunity. But of course, if we get a fail result, the market's just going to look expensive in terms of what's going to happen over the next month or two. So watching very closely. We did see the euro weaken off during the Asian session, and I guess just some concern. We will see Sarkozy and Merkel meeting over the weekend, so that's going to be very closely watched. And the confidence vote for the Greek Prime Minister and his government is expected as soon as Sunday, so we're going to be watching that. Next week we also see a Eurofin Eurogroup meeting on the 20th and the 21st of June. They're probably going to delay a decision out to at least the 11th of July, if not further. So that Greek situation is pretty volatile at the moment. If you have a look at the long-term yields on Greek debt, we've seen it now surpassing 30%. We have a look at Spanish debt at 11-year highs. If we have a look at the spreads on Portuguese debt, we're seeing that at a one-year high as well. So the market's very closely watching the Greek situation and really taking their cues and sentiment, really relying on what happens in terms of the Greek situation. But unfortunately, it is a pass or fail, a binary outcome, so it's either a good or a bad outcome.
There are other obvious trends at all? Obviously, in the US overnight, we saw the likes of materials sold off and those defensive stocks bought heavily. Was that replicated in our session at all?
We have seen that trend emerging, and one thing we have seen is high demand for high-yielding stocks. In fact, if we have a look at the performance across the week, the market down by 1.7%. It's our fourth consecutive week of gains, of losses for the Aussie share market. So we are due for a bounce pretty soon. Even throughout this correction, we're not going to see losses we shouldn't see losses every single week. But if we have a look at what was in favour and what saw demand, those high-yielding areas very much in favour. The utility sector has a yield of 6.8%. That ended in positive territory. The telecom sector, due to Telstra, has a yield of 8.8%. That ended in positive territory. And also the property sector, it's got a yield of 5.7%. So the property sector doing well this week as well. So it does look like investors perhaps looking for a buffer from the downturn that we are seeing in the market. And I guess the thing with dividends is that you get paid them whether the market's going up or down, so it can act as a buffer to some of the volatility that we've been seeing.
Looking forward?
I guess if we have a look at Telstra, the NBN is a key catalyst for the share price move that we've seen, and the other one is the Future Fund, and that was an overhang for a very long time, and we've seen that pretty much disappearing, and so that's helped the share move upwards. And of course that $3 barrier, which was a key barrier for Telstra for 9 months, we saw that broken, and usually when we do see a crack of that $3 ceiling, then usually the stock rallies to at least around the $3.20 mark. We have a look at broker forecasts in the market. They are quite positive in terms of Telstra, so altogether the outlook looking pretty good for Telstra. Remember, Telstra is a defensive stock, and given that we have now seen 10 weeks in this correction, we do see those defensive stocks like Telstra outperforming.